Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on Twitter, GoPro X and CHK daily weekly time frame. So Twitter continuing to show weakness, and on a really strong market day, this stands out. So we have an inside bar on the daily time frame, a lower high and a higher low. We closed right at the low of the day, so that certainly favors the bears. If we break 1794, we're looking at 1783 in the 200-day moving average. If we break 1827, we have plenty of resistance levels. Every lower high over the past week is a resistance level to be watching. So very notable weakness in a strong market environment. Still holding on the weekly time frame. No red flags for the midterm bulls at this point. This is still healthy consolidation. It would really require losing the 50-day moving or the 50-week moving average support at this point in order for this consolidation to become something more than normal and healthy, considering the big bull move that we're coming from. GoPro, same story. So you know you got your right bear list going when the market goes up 0.5% and names like Amazon, Facebook, Google, they're all hitting all-time highs and going 1 to 3%, and you got Twitter and GoPro in the red and very weak. So continuation to the downside, and the bulls still have to form a higher low. At this point, it's 841, but it must be a higher low compared to 821 if they want any hope of trying to turn things around. But as we know, it's all about the weekly, and we are seeing a very clear rejection at this point with 1 day to go from the middle Bollinger Band resistance of 883. If we cannot get over this level, the trend is not going to change in favor of the bulls anytime soon. So that is our guideline in terms of when we can be looking for the bulls to show up. X oversold bounce got squashed, a lot of profit taking, but we closed at the low of the day. So this tells me we're looking for a higher low to form, but because we closed at the low of the day, this tells me it's not formed yet. If the candlestick shape had a long lower wick and we closed, in the middle of the day's range or up towards the high of the day, that would be a different story, but that is not the case. So we have our low of the dump, 1855, higher low of 1920, and we need a higher low compared to 1920. Otherwise, the bears are going to take right back over. We do need to be cautious because it is a potential little short-term weak bounce, and I wouldn't call it a bear flag on the daily at this point just because we did see some significant moves to the upside, but the weekly time frame is a potential bear flag. It's still very weak, rejecting from exponential weekly resistance and a big upper wick of profit taking. So we have to see the bulls form a higher low compared to 1920 with a lower wick showing the bulls bought the dip off of that support level. CHK dumping on big bear volume, so watching support now of $5, and this is playing out as exactly as anticipated, where we're looking for another touch of this horizontal baseline, this descending triangle pattern. We'll look for $5 to hold. That's a nice bottom fishing level. If we get in the low $5 range and you make a bullish entry at $5, you can either use that $5 psychological level as a stop loss with very little risk in terms of the amount of downside you would subject yourself to, or the low that we've seen of 488. But it's a descending triangle pattern with a horizontal base of support, our lower high, and I would expect to bounce off this level and make another attempt at this 100-week moving average resistance sometime in the next 2 weeks. If we lose $5 support, it is a very clear bear break, and we can be comfortable going bearish on CHK as the trend has shifted on the weekly time frame, and that would just be a new lower low. So that's what we've got going on this list. Bears standing out on a strong market day. We'll check back in over the weekend, and I hope you have a great night.